Well, good morning and welcome to our weekly Wednesday. My name is Clark and we are with Ruoff Mortgage. And so we wanted to think of things a little differently today and take a look at something that maybe you haven't considered. So you may very well know that the market has come down quite a bit, even inside of this calendar year. If you had a client that purchased a home prior to basically April of this year, rates are lower than where they were when they purchased. Essentially, if you look back beyond April or the spring of this year, all the way through basically January of last year, so all of 2018 and basically the first quarter of 2019, we are seeing that interest rates have come down. Why is that important to you? Well, here's the thing. We always want to make sure that we have opportunity to be able to stay in front of our database, stay in front of our past clients, give us reasons to be able to do that, to stay in front of them and give us purposing to have a conversation, as opposed to the general, are you looking to buy and sell real estate? Do you know of anyone who is looking to do so, right? So it gives us another reason to be able to reach out to them. You know, the GMAR stats say that a client will use the same agent on the next transaction, but however, they don't do so 86% of the time. You know what the number one reason why they don't use you again is because they can't remember your name. They had a great experience. They would love to use you again, work with you again, but in many cases, they can't remember your name or they can't figure out how to contact you. So what we need to do as professionals in the industry is make sure that we have reasons to stay connected with our past clients, our sphere, and our database. So with that in mind, this is another way you can do so. And what you're going to do is be providing them with something of value, right? Something that they can actually sink their teeth into and help save them money. And then what happens? You become the hero because you're the one that suggested it. So here's what I would tell you. I put up some notes up here because I wanted to be able to refer to them. So just very quickly, if you have a client that financed these three different amounts, and in general, we can talk about different numbers, but I just wanted to kind of give you an idea. What would happen if they reduced their interest rate by 0.5%? And that is a very real number, a very real possibility in today's market relative to where they were. Some people can do it even better, depending on their situation. Maybe they had some credit challenges in the past that forced them to have a higher rate. Whatever it is, interest rates are significantly lower. So watch this. If they reduce their interest rate by 0.5% and they owe about $200,000, what it's going to do for them is they're going to save $21,000 over the life of the loan. $21,000 just by reducing it 0.5%. If they owe right around $300,000, the savings is $31,000 over the life of the loan. And if we continue that out on a $400,000 loan, it's $41,000 that they would save over the life of the loan. That's significant. You know, Geico, I believe it is, has built their entire model around saving hundreds of dollars a year on their auto insurance, right? We're talking about being able to save $41,000 over the life of the loan. That is a significant number. Once again, if we start talking to clients and saying, hey, here's the opportunity for you, this really opens up doors. And maybe they don't look at refinancing. Maybe by you getting in front of them, you know what, actually, I appreciate you reaching out. You know what, my cousin is getting ready to list their home and I was getting ready to call you. By you prompting that conversation, now all of a sudden you have an opportunity to get in front of another client. And with that in mind, what we do is we have the opportunity to help them save money. So here's what I'm offering for you. What you can do is you can reach out to your database, your clients that have closed basically in that window that I told you, January of 2018 through April of 19. Within that window, rates guaranteed are lower now than where they were. Now, me even looking back, there may be situations that arise that there's opportunity for those people, but very specifically, it is an obvious option and choice for them to be able to take a look at it. So here's what we have to offer for you. We will do a complimentary mortgage review on your behalf to say, hey, here's what we're doing. We'll take a look at the numbers and say, by looking at a refinance, here's what we can reduce your interest rate to, and we can also save you this money, or much money, monthly basis and over a life of the loan. And once again, here's the thing. When we review this, if they end up and they're in the best position possible, we're not going to try to put them into a situation that is not financially beneficial. We will let them know that, and we will say, hey, you know what? It's in your best interest to do nothing, right? And once again, that way they have that peace of mind to know I am in the best position possible, regardless of the outcome. No matter what, which direction we go, they will know that they have the best mortgage available to them, whether it's making a change, or if it's, you know what, you've been hearing things on the news, hearing about things about race and so forth. We've looked at it. Right now, it's best for you to stay put, right? And we have no problem telling them that. So that's one thing that you can do. Some other options, maybe reducing their interest rate isn't the biggest button for them because they need to do some other things. We can provide them savings in other ways. Maybe their home's value has gone up to the point where we can consider looking at getting rid of PMI. Maybe they put 10 to 15% down, and over the last 18 months, things have gone up. They've paid their balance down. So coupling those two things together, they're able to get rid of PMI. Once again, you're the hero because they're saving money not only by reducing their rate, but also by getting rid of PMI. Another thing is maybe they had an FHA loan that they weren't eligible for a conventional mortgage because of debt ratio, because of credit, limited down payment, whatever it was, whatever their story was of why they needed to choose an FHA loan. Now, maybe they're in a position that we can do a conventional mortgage, the position that most people want to do. Also, maybe they're in a situation that they finance less than this. Maybe they're down around 100,000, right? And we can take a look at it and say, hey, by reducing your interest rate and going to a 15-year, here's how it impacts your payment. Who wouldn't want to pay their house off in half the time? Anytime a client is somewhere right around $100,000 or below, I always discuss a 15-year just to make sure they have something to think about, to consider, and we show them the interest savings on that as well. And then lastly, maybe they want to do some renovations. Maybe they've been in the house for about a year. They compromised on the location they wanted, the school districts where they wanted to be, but the kitchen was not what they wanted. They didn't have the bathroom in the order that they wanted, or the style that they wanted, or even the number of bathrooms, or the number of bedrooms. Maybe we're in a position that they want to do some renovations. You can bring up that conversation, or we can have that conversation on your behalf to say, hey, you know what, there's opportunities to do that. And you know what, maybe we'll do another dedicate next week's video to renovation loans, just to kind of give you an idea of what's going on with that. Can you please note that? We'll do that to let you know what the opportunity is with renovation loans, because the nice thing about it is with them, just to kind of give you whet your appetite a little bit, we don't have to have the equity in the home right now. We will look and base the value on the post-remodel condition. We have conventional, FHA, and VA renovation loans available for your clients, not only when they refinance, what we're talking about right now, but also when they purchase the home. So if you have questions about that, or if you don't know much about a renovation mortgage, make sure you check in next week and we'll talk to you about it. We actually had one of our representatives come out and do a lunch and learn at the office in Livonia. We also at Keller Williams out in West Bloomfield. We had that available as well. So if you were not available for those classes, the live classes that we had, make sure you tune in next week for those, because we'll make sure we break those down for you as well. Speaking of tuning in, we want you, if you click the button below, you can actually subscribe to our Sexton Team YouTube page, and anytime that we have new videos that are added, you'll be alerted. So maybe you missed a class and you weren't available on, a particular Wednesday moving forward or whatever. You'll be alerted so that you can check back in and check out the materials that we are putting out there to see if it helps your business grow. So once again, guys, the purpose of today was we wanted to provide two things. One, we wanted to provide you an opportunity to reach out to your database and give yourself a reason to do so, right? Give yourself an additional touch point to be able to connect with them. And what you can do is have the conversation with them and say, hey, you know what? And you know their situation because you helped them with their house. You know that they bought the house on 123 Main Street and they paid, $320,000 and they financed 300 or whatever the number is. And you can say, you know what? If you have a conversation with Clark, there may be opportunity for you to save over $30,000 in interest over the life of your loan. Who wouldn't want to do that? Why would you continue to overpay on a mortgage when you knew there was an opportunity for you to pay less? There is nothing in the world that we would willfully pay too much for. Certainly, our mortgage is typically our largest expense that we have. So if there's an opportunity for us to reduce that overall debt load and monthly payment, why wouldn't we do that? The reason why I've been talking about refinancing so much recently is I personally just did it in the last 6 months because knowing that the interest rates have come down so much, I actually did it a little earlier. The rates came down even lower than what I had. So take advantage of where we are right now and help your clients. Even if you purchased a house in the last 18 months, or you've had your mortgage for a while and you want us to do, somebody in one of your offices or myself personally, if you want us to do a review for you, have a conversation. Let's take a look at it for you. And once again, if you're in the best position possible, we will tell you that. Say, you know what? You're in a great spot right now based on this 1, 2, and 3. It's best for you to stay put, and we'll let you know that as well. All right, guys? As always, if you have any questions, please do not hesitate to reach out. If there's any topics, once again, that you want for us to teach on, let us know. Shoot us an email, shoot us a text, whatever it is, comment on any of our pages. That way we can make sure that we're giving information that is pertinent and interesting to you. All right, guys, hope you enjoyed this. Hopefully this was beneficial and helpful for you. If you have any questions about this, don't hesitate to reach out. We'll talk to you soon. Thanks a lot.